Headlines we're tracking for you today. Now, edtech player Byju has acquired Singapore-headquartered Great Learning, which is a global player in the professional and the higher education segment, in a transaction valued at $600 million, comprising both cash, stock, and earnout, which is linked to the performance of the company in the future. Byju has also earmarked a further $400 million of investment into this segment towards accelerating Great Learning's growth. Sources also tell CNBC TV18 that Byju has acquired another edtech startup, Topper, which offers learning programs for the K-12 segment, which is the kindergarten to class 12 segment, for under $200 million. With this, Byju has made 14 acquisitions so far, with over $2 billion worth of acquisitions this year alone, including, of course, the nearly $1 billion acquisition for Akash Institute and $500 million for US-based platform Epic. We have with us the founder and CEO of one of these startups that Byju has acquired. We have Mohan Lakhamraju of Great Learning. Mohan, thank you for joining us. And, you know, Byju is on this acquisition spree and is talking to almost every startup in the edtech space. What made you decide that you wanted to go ahead with this deal and be acquired by Byju, especially since you were bootstrapped for so long? What were the discussions like with Byju Ravindran himself, and when did talks really begin?
So thank you for having me on the show. It's really great to be here. So there's a couple of parts to your questions, and I'll answer the second one first. So we were actually part of a fundraising discussion that had been going on for a few months, and we had received interest from a few financial investors. And at that point, we got introduced to Byju and had a conversation with Byju. And, very quickly we discovered a lot of overlap in our vision, in the values that we have, how we think about building businesses. And I also got a sense of the strategic advantage that we can derive by partnering with a strategic investor and operating company as opposed to a financial investor. So that led to further discussions, and here we are. So we actually started talking in March. So that was the second part of your question. The first one, why we are doing this. And I think for that, there are really three things that went into our thought process. The first is that, we've always been an extremely learner-centric organization with a high focus on quality. And, even if it comes at the expense of growth. So because of that focus, we grew in a bootstrap manner, always putting quality ahead of everything else. And because that requires a long-term view, we started small. We really perfected the delivery of education online, and that kind of required timelines and an approach that may not fit with investors' time horizons. And that's the reason we did not raise money earlier. And because of that, there was also focus on strong unit economics. Okay. So the business started generating cash, and so we never actually had to raise money. Yeah.
Okay, and so you're saying you wanted to go, it made sense for a strategic investor rather than a financial investor. And also, Mohan, that brings me to my next question about the valuation of this deal at $600 million. You said that, of course, now you're profitable, you're generating cash. But, what has really driven this number, especially because in March, when you were on a show, you said that the company had a revenue run rate of $100 million. Is that something that Byju found attractive and, gave this value of $600 million?
Absolutely. So, in fact, we are now even more than that. And I think the growth continues strongly and the business generates cash. So all of those things are there. But the reason we were actually looking, to raise money is because of the opportunities created by the pandemic. I think there's opportunities to grow in multiple areas in parallel. And for that, we actually needed investment. And, as you mentioned, given the long time horizon that we have, given the focus on quality that we had, we felt that a strategic investor is a better fit for us. And the value alignment that I had with Byju and how the senior management there think and we think. So I think, that was what was led to that. The other advantage that we saw is that, I don't have to go raise money every year. We are operating in a competitive market, and we will need capital as we look to accelerate. And with the world's largest startup Byju and the deep pockets that are there, we have access to substantial growth capital. So that was the second part that was attracted to us. And the last is that, given the way we have grown,
right.
lot of our team members had to make a lot of sacrifices. We were never the highest pay masters. People made sacrifices and put in a lot of hard work. So this is also my way of thanking them for their efforts, thanking them for all the sacrifices they made, and expressing our gratitude. So I think part of this is also rewarding the employees substantially. All of this talk about startups and fundraising, I feel employees are the ones that actually don't get talked about as much. And so, for us, that is very, very important. And
Absolutely.
so I view this as an opportunity to take care of them.
Absolutely. That's a very interesting point you mentioned, that you wanted to reward your employees. And an important point you said was you don't want to do fundraising every year. That headache, I think, is with Byju's. They'll be doing fundraising more frequently. But when it comes to employees and your team, we understand that the leadership team is going to stay on post this acquisition. What happens to your overall employee base?
Absolutely intact. I think, there is no cuts of any kind that we are even contemplating. If anything, we are actually adding 50 to 100 employees every month because we've been growing very strongly. So we'll continue to add strength to our team, and we'll continue to grow. The entire team is continuing with the company. There's no question of any kind of changes on that front. We will do things the way we have done, except it will be on an accelerated basis. A lot of opportunities that we're going to be pursuing.
Right. Since we're running out of time, can you quickly tell us what is the cash and the stock part of this deal? And there's also an earnout feature that is part of it. So what is the performance that it's going to be linked to? Quickly, if you can tell us.
Yeah, so, I can't give like the specifics of each of these, but basically the future performance is linked to how we do over the next 3 years. Right. So there's a certain plan that we have, and if we execute to that plan and exceed that plan, that's what the earnout is linked to. And then, what everyone got now is a combination of cash and stock.
Okay. And lastly, Mohan, I have to ask you, about the whole development that we've seen in the edtech space in China. How are you looking at that whole development where China has asked school learning edtech players to go non-profit? How are investors going to look at this whole space, and will it benefit players in India?
Yes, I mean, it definitely came as a shock, to be honest with you. But then when you see it in the context of overall what's happening in, internet businesses in China as a whole, I guess it shouldn't come as that much of a surprise. We also saw all the favorable policies that were there on the way up, and now we are seeing kind of another side of it. The good thing is that at least things in India happen kind of in a more deliberated, more thoughtful manner. I think India will definitely benefit from this. India already has a lot of advantages when it comes to edtech and being kind of the education provider for the world. Right, that advantage we've always had. In fact, some of the largest edtech companies globally are today Indian companies, and I think that advantage will continue to be there, partly because of our tech base that we have, the language advantage that we have. Definitely, today we have learners from 170 countries, right, and paid learners from 85 countries, and that happened very fast, and we are able to deliver a value proposition that I don't think the Western companies will be able to match, and so that advantage will always be with Indian companies.
Right. So India is the hub of global education globally. Mohan, thank you so much for joining us, and congratulations on this deal. All the best. And with that, Shruti, it's over to you.
All right. Shifting focus from edtech and also on what's brewing, personal care brand Mamaearth has raised a $50 million round led by Sofina Ventures, valuing the business at $730 million. The round also saw participation from existing investor Sequoia Capital. Early investors like Fireside Ventures, Stellaris Venture Partners, Sharp Ventures and Titan Capital made a partial exit, and the round also gave some early employees an opportunity to monetize their vested ESOPs. To find out more on this, joining me now is Varun Alak, co-founder and CEO of Mamaearth. Varun, welcome to the show. Now, with the new funds, I believe you're looking to expand offline distribution and also explore inorganic growth opportunities in the beauty and personal care segment. Give me specifics, any new verticals or any acquisitions in the pipeline?
So let me first thank you for having us on the show. We think there are three things that we would like to do as we move forward in terms of utilizing some of these funds. Firstly, we're going to focus strongly on core growth, which is growing Mamaearth as a brand and taking it to newer consumers across India, taking it to newer households across India through new channels of distribution, also like offline, which we haven't explored as much till now, as well as continue our focus on D2C. The second piece, which you were talking about, which is creating new engines of growth. And we've already seen and developed some successful playbooks as a part of our growth journey in Mamaearth, right? Be it around marketing, be it around distribution. And we are now looking at more consumer opportunities where consumers are looking for certain white spaces, certain latent needs that we would like to fulfill as a company. We started our journey on that front last year by launching the Derma company, which is a science-based brand, right, where we offer high active, potent solutions for acne, pigmentation, dark spots, etc. And now, as we move in future, we are again looking at more opportunities like that where we can organically enter, and as well as, like you said, we're looking at and evaluating inorganic growth as well, right? Opportunities largely in the space of beauty and personal care, and where we have a clear addition to the portfolio or the organic portfolio that we have, right? Addition of new propositions, addition of new price points, and that we would like to add through inorganic growth as well. So I think that's how we're looking at it.
So are you in talks with any company for, like you said, are you scouting for inorganic opportunities right now?
We actively are. We are in talks with multiple companies. Of course, we cannot disclose specifics at this point of time, but we are in talks with multiple companies, and we are hopeful that over the next quarter, we'll be at least able to share a positive news on that front.
All right, we'll surely keep a track of that. Varun, last time we spoke to you, you said you were open to being acquired. We recently saw Marico buy Just Herbs. Are you in talks? And as you know, you turned Sunic on. Take us through some of the conversations you've been having with investors.
So we honestly are not looking at a strategic acquisition as a company. And this is what we love to do as founders, and we would completely want to do this probably over decades to come. And we would rather than taking that route, would probably take the public markets route over the next 2 to 3 years and unlock value through that direction. And, that seems to be the plan, and hence there is no conversation that's happening on the table.
Okay, so you're saying in the next 2 to 3 years, you're looking at listing Mamaearth. That's a big takeaway, Varun. Now let's talk about the Derma company you just mentioned. You launched that last year. What is the kind of traction the venture has seen? Take me through the growth numbers.
So the brand is about 14 months old, right? And we are already at a 50 crore plus run rate for the brand, and it has actually shaped up really well. We have clearly seen what we achieved in Mamaearth in terms of numbers. We're able to achieve in Dermaco almost 8 to 10 months earlier, right? Which is what we would want to achieve with every new brand that we launch, right? And the market is clearly looking for, while globally the market is already very large for active-based high-performance products. In India also the market is shaping up very quickly, and that trend is coming in. And Dermaco, being the first mover advantage, is clearly seeing benefits out of that whole consumer trend. So, in a good place.
Yes. Varun, you started with a baby care range and soon diversified into personal care. Today, you have about 140 plus products under Mamaearth and 40 plus under the Derma company. You've also hit a 500 crore rupee run rate in India. Take us through the growth of the business, the growth of Mamaearth over the last 2 years.
So Mamaearth has had a phenomenal journey. I think all our focus early on was on getting the right product market fit, as well as ensuring that the brand purpose gets communicated well amongst consumers. And then last 2 years have actually been fully dedicated towards growth. And on the brand, we have seen the brand growing by 400% year on year for the last 2 years, and that also got a bit expedited during COVID. And one, because people were clearly looking for safer, natural options in terms of products, and two, most of our distribution was largely online driven,
Okay.
and our playbooks were really strong when it came to e-commerce.
Sure.
And when lockdown happened, we actually doubled down on those playbooks, right? Because we knew it'll take others some time to actually catch up on that.
Okay.
And that really paid off for the brand. So that growth trajectory has continued really well for us.
All right, so let's talk about the future growth. Varun, what about international expansion? What is your current global footprint and where are you looking to grow?
So strategically, our focus continues to be India and will continue to be India for the next at least 3 years. Right? We believe the market is really large here, and we are just scratching the surface. And we're also going horizontal in terms of India growth by launching more brands or doing inorganics. Right? So strategically, that is going to be a focus. And that said, we've also started doing a bit of pilots and early learning exercise in a few markets. And currently, the first market of interest for us is the Middle East cluster, GCC, where we have been present for the last 6 months now. And slowly and steadily, we are trying to understand and create better distribution networks with our partners in that market. And the second market cluster that we are looking at is South Asia outside of India, which is Nepal, Bangladesh, and we are evaluating how to sort of get a playbook for that cluster right? Because there is a lot of media spillover that happens from India into that cluster, so there is natural growth that we are getting. Outside of these two, another market of interest that is there for us is looking at Indonesia in the medium term, not in the short term. And, that we believe that's a great market from a numbers perspective and from a perspective of brands.
Varun, before I let you go, one final question, and if you could quickly answer that. We've seen consumer startups adopting a phygital model. Any plans to open your own physical stores, or is the D2C play going to continue to be your distribution model?
So D2C is going to continue, and that's a strategic play for us. And outside of D2C, offline is also a very important play for us, especially for a large brand now like Mamaearth, and where we are there in about 15,000 stores now, which are regular distribution stores. And but as we speak, we are also evaluating EBO kind of a model where we will open our own stores. And probably after experimenting this year, we'll be able to share our plans next year with you.
All right, so offline stores is on the cards, and you would start off with exclusive business outlets. Varun, all the best with all your future plans, and many thanks for joining us on Startup Street.
Thank you. Thanks for having me.
On that note, it's time for us to take a short break. Up next, contactless remote patient monitoring solutions company Dozee raises 44 crore rupees in a Series A funding. We speak to its CEO on the other side. Stay tuned.
Welcome back to Startup Street. Now, Dozee, which offers contactless remote patient monitoring solutions, has raised 44 crore rupees in its Series A funding led by existing investor Prime Venture Partners with participation from Your Nest Venture Capital and 314 Capital. We have CEO Mudit Dandwate with us. Mudit, thank you for joining us. And before we come to the funding, I quickly wanted to get an update on how Dozee helped hospitals during the pandemic. You onboarded, you worked with more than 100 hospitals during the pandemic. More than 200 hospitals during the pandemic. You were able to convert beds into step-down ICUs. Tell us, during this whole brutal second wave, how many COVID patients were treated through your platform?
So, hey, before we start, thanks a lot for having on the show, and really excited to be here. So close to about 75,000 patients were monitored on this platform. And even today as well, while we are seeing numbers rising in some of the states, we continue to help states, hospitals monitor their high-risk patients, be it COVID and even now outside COVID as well, in cardiac, nephro, neuro, pulmonology patients as well. And answering your
75,000 patients, COVID patients through your platform?
Correct. So answering, your
right,
first
go ahead,
part of that, how does it help a hospital, right? So it helps in two or three major ways, I would say, which I can quickly point out. So one is it reduces the nursing load by automating the entire vitals monitoring. So whatever nurse have to go near the patient and take the vitals of the patient manually, this entirely automates that. Then the data is also available remotely. That also reduces the risk of infection on the nursing staff. Secondly, it gives a triaging report to the clinicians and the doctors who are attending it, thereby making their duty rounds much more efficient. And also it improves the patient outcomes many folds when it is continuously monitoring the patient, and with AI-led alert system, it preemptively and in early stages, it gives warning signals to the staff that this particular patient is going into red flag zone and needs attention, right? Thereby it saves the crucial hours that you can imagine in such kind of situation, and ends up saving lives.
Absolutely, very, very crucial service there. But Mudit, I have to ask, how are hospitals and how are you working with hospitals to prepare for the third wave, especially since children could be more vulnerable? Will your solutions work effectively with children as well?
So, very good question. So, all the hospitals, states, central government, they are actually, preparing for the third wave. And we are working very actively with quite a few of them. And the point that you mentioned that, children can be vulnerable to the third wave, we are actually running our trials with few hospitals to, validate the efficacy of our system, even for neonates and pediatric patients as well.
Okay, so you're running trials. Hopefully, those will be effective. Coming back to your funding, Mudit, you've said that the fresh capital will be used in R&D to launch new products, enhance your platform capabilities, and you also said you will use the funds to increase your presence in the HDU ward monitoring, home monitoring, and to deliver a cloud-enabled continuum of care. Could you just break it down for us, if you can elaborate on your plans, and what are the timelines like?
So, firstly, R&D products. So one of them I just mentioned that, now we are expanding the horizon beyond just the adult population, and also looking at the younger population as well, that, how the product line can also help continuous monitoring and early warning system for the young population as well, because the needs, the vitals and the physiology is very different in both the use cases. Similarly, we are adding even more parameters to the platform. ECG and temperature is something which will be released in just 2 or 3 months down the line. It's already in very advanced stages and will be launched very quickly. Similarly, we are even working with more such parameters also on the platform. Simultaneously, we are also researching actively on cardiac, pulmonary, and other use cases. In fact, few I would hold some specifics over there, but some very high profile research has been is in the pipeline to be published for cardiac care and pulmonary care, right? Looking into the long-term chronic care management, both inside hospital and at home kind of use case as well, right? So the fresh capital will be used partly for that and for product enhancements as well.
Okay, so that's where your capital will go. But you also announced some big plans of setting up 50,000 step-down ICU beds in over 1,000 hospitals in the next 12 months. How are you going to go about that? And will that require more fundraising through the year?
Not really. As in what we have raised, I think is good to help us out for all of that. And yes, that is the plan that, India really requires to step up the critical care infrastructure. And that's exactly what we are there for, and we are going to help the nation to quickly ramp the facility up. We have already done that over the last 6 months, and we'll continue to very rapidly help India scale up critical care and long-term care, both inside hospitals as well as in post-op discharge care as well at homes.
Mudit, we wish you all the best with your plans, a very critical service, especially in these tough times. Thank you so much for joining us here. But with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.